column next to the purchase order.
QuickBooks makes it easy to manage your inventory. This tutorial shows you how to purchase, receive, and sell inventory. For this example, let's say you own a tennis shop. You buy your racket inventory and clothing merchandise from Smith's Tennis
next
Supplies.
to the purchase order.
QuickBooks purchase orders can help you keep track of what you've ordered and what you've received. However, some suppliers don't require purchase orders. In those cases, you can write a check and increase inventory using the Write Checks form. Or you can use your credit card and increase inventory using the Enter Credit Card Charges form. For this example, you need to write a check for some tennis rackets you've ordered. Go to the banking section and click Write Checks. On the Write Checks form, we'll select the vendor's name from the drop-down list.
Click in the check column next to the purchase order.
Then, we'll click the Items tab and enter the items that the check covers. This enables QuickBooks to track the inventory associated with this check.
To the purchase order.
In this case, you've ordered 100 tennis rackets at $27.50 each, and QuickBooks has generated a check for $2,750. QuickBooks uses this information to calculate the average cost of the tennis rackets you now have in stock.
Click in the check column next to the purchase order.
If you pay by credit card, use the Enter Credit Card Charges form to record the purchase. Fill in the item information just as you would on the Write Checks form. QuickBooks tracks the inventory in the same way. Many small businesses use purchase orders to keep track of what has been ordered and what has been received. We will now show you how to complete a purchase order for an order of tennis clothing from Smith's Tennis Supplies.
Click in the check
column. Go to the Vendor
section
and click Purchase Orders. In QuickBooks, a purchase order is non-posting, meaning it doesn't affect your books or finances.
Next to the purchase order.
It's only a record of what you've ordered. Later, when you receive a bill from the vendor, QuickBooks can turn the purchase order into a bill so that you don't have to re-enter what you bought. First, you need to select the vendor. Click the drop-down arrow in the Vendor field. Click Smith's Tennis Supplies. Now you need to enter the items you're ordering. Click in the Item column and begin typing the first item, shorts. Because shorts is an existing item, QuickBooks completes the item and related fields, such as description and rate, as soon as you type the first few letters. Now, you need to enter the quantity that you're ordering, which is 30. Click in the Quantity field and type 30, then press the Tab key on your keyboard. Let's continue entering items until the purchase order is complete. You can change the cost or description of an item at any time. Click Save and Close to save the purchase order and close the form. Let's say a few days later you receive the merchandise you ordered from Smith's Tennis Supplies, but they aren't going to bill you until later. You need to tell QuickBooks you received the items so that your inventory count is up to date. Go to the Vendor section and click Receive Inventory and choose Receive Inventory Without Bill. In the Item Receipt form, click in the Vendor field and begin typing Smith's Tennis Supplies. Because this is an existing vendor, QuickBooks finds the name and completes the field for you. QuickBooks checks to see if there is an open purchase order for this vendor. If there is, QuickBooks prompts you to receive against it. There may be times where there isn't an open PO for the items, for example if you faxed or called in your order. In this example, there is an open PO, so click Yes. Click in the Check column next to the purchase order to select it. Then click OK. For each inventory item on the receipt form, QuickBooks uses the information on the purchase order to adjust your quantity in stock, increase your inventory asset account, and lower your quantity on order. QuickBooks also recalculates your average cost for each item. Later, when you receive the bill for the items, you can turn the item receipt into a bill. Go to the Vendor section of the home page and click Enter Bills Against Inventory. QuickBooks asks for the vendor name and then displays all item receipts for that vendor. Click in the Vendor field and begin typing Smith's Tennis Supplies. Click the item receipt to select it. Click OK. QuickBooks completes the Enter Bills window using the information from the item receipt. If the costs differ from what you had expected, you can edit them on the Enter Bills form. Click Save and Close to save the bill and close the form. When you save the bill, QuickBooks increases your accounts payable account. There may be times when the bill for the order comes with the delivery of the merchandise. If you receive inventory items along with the bill, click the Receive Inventory icon to open the Enter Bills form. You can then follow similar steps to the ones we've just shown you to enter the bill and update your inventory in QuickBooks. When you receive inventory, QuickBooks does several things behind the scenes. QuickBooks increases your inventory quantity on hand and your inventory asset account by the cost of the items you've received. QuickBooks also recalculates the average cost of the items on hand. When you enter a bill for the items, your accounts payable balance increases. You sell inventory items just as you would anything else by invoicing or entering cash sales. When you sell inventory items, QuickBooks does several things behind the scenes. QuickBooks reduces the quantity on hand of the items you sold and reminds you to order more if you go below your reorder point. QuickBooks reduces your inventory asset account by the cost of the items you've sold. QuickBooks increases your sales income by the amount of the sale. And QuickBooks recalculates your cost of goods sold for each item. To learn more about QuickBooks, go back to the Learning Center and select another tutorial from the list.